Okay, welcome everyone. In this channel, we cover stock charts, we look at technical analysis, I point out trade ideas, and I've got a couple trade ideas I want to point out today. We're going to go ahead and look at how the week closed out and go through some subscriber stock picks. So just a mixed bag. Before I get started though, I want to point out that a subscriber brought to my attention that there is a fake account or maybe multiple fake accounts using my name and using my name and my logo and making comments trying to direct people to call a number or to get a hold of them on a WhatsApp ID. Just to point that out, I will never send out my phone number and let you tell you to call me. I'm not going to give you my WhatsApp ID. Anything that is official on this channel, I will talk about in the video. Or you will see in the comments or in the description below. Or if I do comment, and I do comment a lot to a lot of my subscribers, look for and I want to point this out. This is my badge. It says Money Maven right there, and it shows that I'm official. I have my logo and I have my name, but it's highlighted in gray, and that's the owner of the channel's comment. All right, let's get into some trade ideas. All right, so we'll start off with TAN. And this is a really clean chart. So here's the thing on this. If you've been long TAN, I think you can continue to be long TAN. I don't see any sell signals, but as a heads up, I think the sell signal is coming. And what I see is big negative divergence on the daily chart. See this RSI? See how the momentum is just dropping off? It's heading down. You've got lower highs in momentum, and yet you continue to just have higher and higher price on less and less momentum. Look at the PPO, same thing. As I zoom in, RSI or PPO negative divergence, and you also have a bearish crossover. See the bearish crossover where the blue has crossed below the orange? That's your bearish crossover basically. And so we've got negative technical momentum indicators signaling that the momentum is shifting. Now you still have a price channel, and you have a lot of people that say the trend is your friend until the end, which is true, but these are telling me that the end of the trend is near. So if you're long, you can stay long. You never know how long this thing can go, but just be on the lookout for that sell signal, because from my perspective, I'm on the lookout to short this thing. And so if I'm looking to take the other side. Now, I'm not taking it yet because I don't have the sell signal. And so I guess if you're long, you don't necessarily have to sell yet. But again, just keep in mind, I'm looking to short this thing when we get a break of trend. And there's your trend line on the daily chart. Nice clean up trend. And first level of support, I really think we'll probably head just right down to here, 58. Well, I wouldn't say that's the first level, but I would say that's a target. And that's about a 30% drop. We might get a couple reactions right in this little cluster area right here. But again, then you've got this thin zone right here where the stock just gapped. Look at this, lots of gaps in here. It was just gapping higher and also just moving higher. No trading within this area. So I suspect once we break trend, it'll be a quick drop down to that level, and then we'll probably find some support right in that area. NEO here, I continue to remain short NEO. What do I see in NEO? Well, I think we're heading down to this trend line right down here. You can see on the daily chart you've got this trend line. We've been walking up it, and zooming in you can see we broke trend, or we had this minor trend line right here. We broke that trend, and we swift move right down to support, which was about 38.70. We had a reaction to action, and we kept getting rejected right up there at 48. It's about 48.20, 48.12, somewhere right in there. You can see multiple tests, 3 actually, where we ran up, bounced, stopped short. The next day was rejected there, and then a couple days later rejected again, and closed the week down near the low of this recent range. So pretty bearish action. I think we're heading down more. When do we get there? Well, I don't know. This thing has run quite a lot. So when, I suspect we work our way down, hit this trend line, get some sort of a reaction, and then we'll see. I'm likely to cover my short trade down near this trend line because that's support. And I would, another sell signal will come on the break of the support. Negative divergence has been playing out. Here it is right here. Started to show itself right up in here, and this is where I got short. And now we've got momentum to the downside. Bearish crossover on the PPO with nice momentum just pointed straight down. So everything's pointed down. Price should continue down. All right, Tesla. They're trying to keep this one propped up. We'll see. I know there was an announcement over the weekend about them shutting down the Model S and X production lines. I don't know if that's going to be a catalyst or not. We'll see. But the RSI, if I go back here on the daily, you can see that we basically have kind of an equal high in the momentum, and it made it pretty much made a higher peak in price. So it is negative divergence right there. And then as you look at the PPO, we're just getting close to crossing. And when you have such a steep angle of approach, just a quick example, see how this blue line separated from this orange line? That signaled really strong momentum all through here. So you were way up here, and now it's selling off, and it's pretty much coming kind of straight down like an airplane, crashing into the ground. So the momentum is starting to, show itself to the downside, and I think it's going to be enough to get that bearish crossover. You get that bearish crossover, and that's confirming the negative divergence, telling me lower price is coming. This negative divergence also, that's short term. If you run it out, it extends all the way back, really started to show up about right there. This is where the longer term negative divergence showed up. So this high right here was a divergent high. Of course, there was a lot higher prices to come, and that's why negative divergence is not a reason to just get short. You need to see a sell signal. The sell signal really, in Tesla, we never really got a clean sell signal either. Yes, you had a trend line right here, and it broke trend right there, and you could say that was your sell signal, but there was no follow through, and it just kept following day. It just kind of popped up, and then it just went sideways. So we still haven't seen that big impulsive sell signal. So if you wanted to be conservative, you could wait for that big impulsive sell signal, a big bearish engulfing candle or something. This is a bearish engulfing candle right up here at the high. So, we have a bearish engulfing daily candle. Didn't really get the confirmation, follow through on the close though. So the chart, this chart isn't as good as the Neo chart. I think it's going down, and I do have a short position that I just recently took, and I do believe that we're going to see some lower prices. But again, we don't have quite as much of a case to be made as of right now on the bearish side. Except for the fact that this thing's absolutely ridiculously priced. But again, we don't know if that becomes more ridiculous or whatever. I do know it's very likely that this thing's going to have a pretty major correction sometime relatively soon, but I don't know when, and I don't know at what price. From my trading perspective, I zoomed in on the hourly. I took a short right on the break. I really started to get short right about here because we broke down right here, and it looked like a good short in this area. So I think this whole area is kind of a topping area. Again, it's a smaller size position. I'll add to it if it starts to work. It's starting to work now. Last week it started to work. We'll see if it can continue. Well, and looking at some of these other solar stocks, they're starting to break down as well. You can see here run. Here's your daily chart, uptrend line right there. We broke trend right back here. Did kind of a series of back tests, but there's a full back test, and then it came up and didn't quite get there. So that's bearish. If you're coming up to do a back test and the sellers step in early, that's basically what's happening there. That's bearish. That tells me lower prices. And you can see we're getting pretty good impulsive breakdown candles. There's an outside day candle. So I think lower prices. And it was all priced into the divergences before the price broke. So here's your negative divergence. This peak right up in here was a divergent high. And I was talking about this. See my trend line that I drew right up there? I was saying this was a divergent high. It looked like a good short if we broke this short-term hourly trend line. We did break. and then it's been pretty much all down since. So I think the downside continues, and just in general, these other solar stocks, they're all looking like they're starting to break. That's why I'm looking at that TAN ETF and Tesla. I think they're next. All right, FedEx. So yeah, it looks bearish. Looks like we're gonna break. Here's what I got on FedEx. Bearish rising wedge on the daily. We broke. There's your sell signal right there. We got 2 confirming candles, not super impulsive, but still lower prices, confirming that there are some sellers here stepping in. And I took the short right up here on the break of that price channel right here of the bearish rising wedge. Also, big negative divergence right here was completely intact on the RSI, telling you that this was likely going to break. And if I zoom in on the PPO, bearish crossover on the PPO right there. Up this price action here created a bearish crossover. So I think it's likely we see more selling in FedEx. First level of support that I have is about 276.50, but I think it's likely we go much lower. So we're going to continue to watch this one and see if it breaks down, continues to break down. As it continues to break down, I will continue to mark out some levels. Looks like we got a level that's likely to be somewhere right in here. Yeah, we'll say right about 259. All right, GM. So I said in the video that I covered this trade right here. Just a bad move, basically. I broke even. I didn't lose anything, so that was fine. But missed opportunity on that one. It happens. And, since me covering, it's down about 5%. I like this to break down, and that's why I took it as a short trade. I liked it to break down at least to this trend line here, and possibly, or I guess probably, down to this lower trend line down here. We're likely to get a reaction right here. Maybe we bounce and then break. But so the trade's pretty much, we're close to the first level that I'd be taking profit. So we'll just have to see. Maybe we get another sell signal when we break down here. I just don't know when. So we'll continue to watch this. All right, let's look at some oil stocks. Starting to get bearish on these things. And again, I was bullish oil stocks down here. Not a lot of people were talking about being bullish oil stocks. In fact, a lot of people were going with the headlines saying that, if Biden wins, he's going to be bearish. He's going to be hard on oil. Maybe that's true, but hard on oil might mean less permits and rising oil prices. And that's what the market took it as. So, but in general, I was bearish down here because we had bullish divergence. There's your bullish divergence right down here. That was a divergent low, telling me that we were likely to break to the upside. And we did, and it's been about a 38% run or so since then. Now, it looks like it's starting to get bearish on us again. So you can see here, negative divergence in the RSI on the daily chart. That's cleanly intact. We don't have the PPO crossover. It's kind of flatlined right here. Maybe we get a little kick. Maybe we get another new high, and then we cross. Or maybe we just break. I think we just break. That's what I'd say. Again, that's just a guess, but just given my intuition on looking at the chart, I would say we break. And the thing that we have is a bearish rising wedge up here. So you look for a break of this trend line on the daily. See that one right there? That's your uptrend line. A break of that would be your sell signal. We also have kind of clean resistance right up here at about 42. There's your island cluster top reversal pattern that played out for that big reversal, and we've come right back up to it, and that's where the major resistance should be at. So we've got negative divergence, bearish rising wedge coming into major resistance at 42. A new marginal high above 42 and then break would be possible, but I wouldn't expect us to go too much beyond that 42. Actually, in fact, if we pop up into this 42 area, maybe 43, and then fail, maybe intraday pop, and then roll over, that would be very plausible as well. That would run stops intraday, and then you could fail and still get that bearish close on the daily chart. So that's possible. And XOM, you can see starting to put in that negative divergence on the RSI. See the RSI on the daily starting to turn down. The PPO has not turned down, or we don't have a bearish crossover, so nothing bearish there on the PPO. but we are starting to get it on the daily RSI. So again, we got to watch for a sell signal. Here's the trend line, just waiting for a break of that trend. Right now, it's sitting up around 42.50, and we get a break of that trend, that'd be your sell signal. Again, this could obviously go higher. You do have your major resistance, looks like it's right about there at about 49.50. And this could go higher. I'm not saying it's time to short this thing. I'm saying it's time to start getting, we're on watch, basically. It's starting to be on watch. Same with the solar stocks like TAN. It's on watch. And that's how you have to trade. At least that's my style is, first I start pointing out, hey guys, I'm looking at this. Kind of like the oil stocks back before they ripped higher. Say, hey, I'm looking at this. Looks to be, it looks like it's set up. Here's what to watch for. And then if we get that, you take action. Or, I do at least. Nothing here is advice, but it's all my opinion. So this is on watch. It could continue to move higher, but we're going to start to watch these oil stocks for a short. CVX, Chevron, another big one. It doesn't have the bearish divergence. It's just negative momentum. So I could see CVX popping a little bit higher above this 95.70 area, making a new marginal high and putting in what would be bearish divergence if it does it anytime soon. You also have on the PPO, you do have the bearish crossover. So again, this one's on watch. You can see I had, here's my profit targets on the bullish side. I did take profit and overshot it. I'm never able to really call the exact bottom or the exact top. I don't think anybody really is. It's really just about defining trade setups and finding profit targets and making money basically. Gap here. So gap, here's an uptrend line going back to the June area. Nice clean uptrend line. We broke trend. That's an impulsive breakdown too. Even though the breakdown wasn't that impulsive, from the high all the way down and then breaking, that was pretty impulsive because this was a big 20% gap down. So trapped, that's a good trap. And then it broke down and now it looks, we started to hold this support shelf here. And now you can see the daily close on Friday, we broke. So I think we're heading lower. The only thing about this one is, you did have negative divergence. I take that back. Here's your negative divergence. You really had a divergent high all through here. These were divergent highs. And so, negative divergence, breaking trend. I think we continue to the downside. Ultimately, probably filling this gap or at least coming close at 1560. Looks like we have another support level here at 1850. Same with BBY. Anybody that's still in this trade, it is continuing to the downside. So here was your uptrend line. I kept talking about this one. We started to get big, clean negative divergence right there. It's really nice when they're that clean. And so divergent high here. This was a divergent high, and this was a divergent high, and this here was also a divergent high. And then finally you broke. And how did we break? Well, impulsively through a gap. All right, gaps are some of the most impulsive ways to break down or gapping is a very impulsive sell signal or buy signal because it traps the opposite side of the trade. And so you gap down here, trapping in, and then sold off pretty impulsively. And you can see it trapped all this bullish money that was right in here. And then boom, it's just sold off pretty much straight down, knocking out all the gains in a period from when it started to gap to now. That's about 17 days, and it's wiped out all the gains, really going back to about here, which was a period of, we'll say, 105 days. So again, when you catch a short trade, stocks go up 80% of the time. This is the point I try to make. 80% of the time, they'll kind of muddle their way along, going up inch by inch, and then you get bearish setups, and they'll continue to go up day after day, inch by inch. And then when they finally break, they give back all those gains, and usually a lot more in a very short period of time. And so when I talk about looking for a short setup and the market continues to go higher, just be aware that I realize stocks go up most of the time. I'm looking for when they come down and they give up all those gains and a lot more. And that's exactly what this is. You know, this, if this sells off even more and comes down and fills this gap down here, that will have, you know, given up gains of, you know, 124 trading days. So quite a bit. Let's look at Qualcomm. All right, Qualcomm had a nice sell-off day on Friday, and, you know, my trade's profitable. And here's, you know, I basically got short right here when we gapped up on earnings. So it gapped up on I think it was up 12 or 13% right into major resistance, and that's where I took my short. And then it did a series of back tests where I added to my short. So I added to the short here, and I added to the short here, and then now it's gapped down and sold off. But we are coming down into the support area of this upward price channel. So again, I could see a reaction. Maybe we get a bounce, or maybe we break. But you know, this is support, and until you break, it can continue to hold, and we can continue to move higher. So I would look for. I think it's going to break, and I think we're going to come fill this gap, is what I think. But again, we could get a bounce first. And what I'm likely to do, if we get a bounce, I'll probably add back my short, or add to my short, basically. I did take some profit on this on Friday. I always like to lock in profit to ensure, or to give me a much higher probability that a trade can't be a loser. And at this point, because I started my short here, which was a profitable entry, added to it, I'm decently profitable on the move on Friday. So I took a little profit to lock that in. So now it's hard for me to give it back. If we bounce, I might add back some of that short exposure for a break of this trend line and a gap fill down to 130. Again, negative divergence was in play on this entire trade. You can see it right there. PPO had negative divergence. You've got the bearish crossover as well. See the bearish PPO crossover. So in general, it's short-term bearish, but we still have this upward price channel. So I'd like to see that go to potentially set this up for maybe a much larger swing trade to the downside. There's a gap all the way down here as well at 94. So if we start to break this price channel, I could see us heading down to this 94 in, you know, the next weeks to months, basically. Intel, it's a guessing game right now. So I don't have a position in this. I thought about taking a short trade, but again, it's holding this support area right here at about 49.70, and it held that on Friday. So I don't have a position. I'm going to see what happens. This should tell us which way it wants to go. Let's look at the weekly for this one. On the weekly, you roll back to 2009. So here's your entire bull market in Intel, and you can see we've held this weekly support the entire time until recently when we broke. Now, is this a bear trap and it's going to move higher and, you know, stay within this bullish price channel? Or was this the breakdown? It was pretty impulsive. You can see big weekly drop here followed by a confirming week. So in general, that's pretty bearish. You also, if you look at the weekly, you have big negative weekly divergence. That this was a weekly divergent high up here. So, you know, you have a negative momentum on the weekly chart, but you always have the potential for bear traps, and they left it on Friday kind of keeping you guessing. So I don't know what this is going to be. So until it gives me a little more information, I'm not willing to take a play on this. Now, if we break down next week and start to impulsively sell off, I would say that this was just a back test. You know, you break down, you come in for a back test, make it look like it's going to recover this week, because this was a pretty clean, you know, this looked like a bear trap this week, or this green week right here when it closed way up here. If you were a bear and you shorted it on the breakdown and you get the weekly close right here, you're like, whoa, we recovered support and pretty cleanly, you know, with a nice impulsive recovery. So this, you know, I was trapped. This was a bear trap. And that's how you felt. So now with the following week, we sold right back off and they closed it right there at support. Does this support hold or does it break? Questions to be answered next week. SQ continues to work its way higher while extending this big negative bearish divergence. So at this point, unless SQ just rips higher and it takes out these divergences, which is possible, then you've got a big bearish setup, a big negative divergence, and telling you momentum is really just continuing to drop. Each and every new high is on less and less momentum. This is set up for a break, a bearish break. So again, we're at resistance right here. We keep tagging it. I would say the probability is that we do break, because that's what the momentum's telling me right now. We don't have that bearish crossover. See the PPO? There's no crossover. It's just gone flat. So maybe look for some sort of further developments there. And yeah, but I would look for maybe a big gap down or something down towards the bottom of the channel. Maybe we muddle around there for a little while and then break. Let's look at volatility. So this is interesting. I've been talking about this for a few days now, saying it looks like it's a potentially good area to go long, and I was starting to build a long position in volatility. I explain how I build long positions in volatility, or short positions for that matter. But in general, I never take a very large position in volatility. If I have conviction that the market's going to sell off, then I will take larger positions in short trades, or you could look at SQQQ or something like that. A leveraged ETF, although they're not my favorite, but for people that don't have the ability to short, and then I'll take some volatility as kind of the icing on the cake. So I always take a much smaller position. The way that volatility seems to work, at least what I've noticed, is when you get a sell off, you have usually an extended uptrend. You have people that just basically get greedy, and they don't think a sell-off is ever going to come, and they think there's just more and more upside, and the bull market will never end, because they look at their account every day and they see that they're making money, and they get complacent. They don't want that euphoric feeling to end, so they don't sell when things are winning. They think they're going to continue to win more. And so what happens is volatility gets compressed, and it keeps getting compressed, and then what happens is there's all of a sudden this uh-oh moment that takes place in the markets, where everyone realizes that the uptrend is over, and everyone all at once tries to scramble to reposition for some downside action. So institutions will get out of calls and take, buy a bunch of puts, and people will start selling all their positions, and everyone tries to rush for the exits all at once. And during that transition moment, that's when volatility explodes to the upside. And so that is when I usually sell. I sell my volatility longs into that, kind of that impulsive move to the upside. And then after that move's taken place, then everyone, many people have their short positions. They have some puts. They've got, they've sold some of their stocks. And so they've made their adjustments, their initial adjustments. And so then volatility can start to, fizzle down and fade, even though maybe the market continues to sell off. Volatility oftentimes will start to subside. So usually it's that first impulsive move that is going to be your best move. Now this back here on UVXY, this was pretty uncommon to see such such a massive move up. I did not catch all of this. I know I caught some of it, but definitely not all of it. And it just exploded higher. But again, you can expect to see moves, little moves like this. That makes a lot of sense, and this move from there to there was a jump of about 68%. So again, watch for volatility to continue to rise. Looking at the chart, you've got bullish falling wedge right here. We broke to the upside. So your breakout was right here with a confirming candle. So that looks good. Even though we might, come back and do a back test, still looks like a good breakout to me. Not super impulsive yet, but it was a break. And then if you look at the daily chart here, let me grab this line tool. You've got bullish divergence. Really, it's really right about there, where you made kind of an equal low, and this was all lower low price action from previous. So bullish divergence in volatility, and this was good. This is, along with the bullish divergence in bonds, the bearish divergence in the SPY, the triple Qs on multiple time frames, was telling me that, okay, volatility is likely to move higher here. So this move hasn't really even gotten started. I mean, yes, it has started, but I think there's potentially a lot more to go. What I'd be looking for is opportunities to add, and that's what I'm doing personally. Again, just my opinion, not trading advice, but you get a drop down here against this trend line of about 10%. You know, I would probably add a little bit and look for a move higher. First line of resistance, yep, right up there at about, roughly 1640, which from where we're at right now, that's a move up of 37%. So yeah, I could see us getting up there and possibly higher. Okay, and we'll round the video out with a look at the general markets. So you've got here, oh, and there's one other one I want to point out, which is a financial stock. But you've got triple Qs here. Looks like we're just flagging. All right, this is a daily chart. We had this big impulsive breakdown. This is a bearish engulfing candle here. Now we didn't get we didn't get a confirming candle. There was not really follow through the next day. So something to note. I like to see follow through, and we didn't get it. So what does that mean? Well, we'll have to wait and see. But we're still flagging out in this area. So do we continue to flag out and then break to the downside? The divergences tell me yes, but it doesn't mean we can't continue to extend the divergence. Maybe we make a new marginal high slightly above this 308.50 area, just pop above it a little bit, then roll over, kind of another fake out move. That's possible, but see this bearish divergence on the daily chart. It's just extended way out here. It's really, there's all this trading action up here. The reason why I think all this trading action is just going to fail ultimately, and we're going to head down to the bottom of this price channel, down around 230, 240, depending on when we get there, is all this price action up here above this price channel has been divergent high price action. If I roll out to the daily, we go to the weekly here. This is your bull market in triple Qs going back to 2009, and everything is, everything's fine and good. We're in a bull trend there. Then we break in 2018. The Fed steps in and manipulates it higher. And then it's back in the price channel, so it continues to the top end of the price channel. Then we break again with the COVID drop. The Fed steps in and manipulates it higher. They pretty much went crazy. And so it shoots straight to the top of the price channel, overshoots it, back tests, see it hold support. And then now we've just been trading above the price channel. This is the only time in the entire bull market that triple Qs has been trading above the price channel. And it's doing it with big negative divergence. See that right there on the weekly chart? So all this price action is divergent high price action, which has a very high probability of failing, which is what I think this does. And ultimately, I think we, at a minimum, head down to the bottom of the price channel, okay, down here. When we finally start to get that, that momentum to the downside, I think we come down and hit the bottom. I don't know when it'll actually get there, so I don't know at what price. But I think we get down there, and then we'll see. But, I think there's a high probability we break the price channel. We've broken it twice already. I think we break it, and we'll see what the Fed does, I guess, at that point. Because the Fed reacted here, and the Fed reacted here. So if we break, start to impulsively sell down, what's the Fed do? And at that point, we really got to start looking at the dollar and gold, because they've stepped in here and here. They've pretty much used all their ammunition. So if they step in again, it's likely to be only through a ton of money printing, and the dollar's likely to really start to get affected. And gold that might be the next leg higher in gold. Speaking of gold, let's look at Barrick Gold real quick. I know I said this was the last one, but again, I just want to point these things out. All right, so Barrick Gold. Here's what we got. Let's go to the daily. You've got bullish. All right, you don't have bullish divergence yet. And here's the thing that I was pointing out. When we came down, when gold bullion was selling off, we basically sold off down to here in the momentum when there was no bullish divergence, but we ran right into major support at this 2250, and at the same time gold bullion was hitting that 1790 that I've been calling for months, and that's major support. So I knew we were likely to get a reaction there, but we didn't have the bullish divergences telling me that maybe we weren't going to just have a V bottom and shoot straight up, and I thought that it looked like we could actually put in a bullish divergence pattern. And that's what, as of right now, it really looks like that's what's happening. So if we go slightly lower, let's say we open Barrett Gold on Monday at 20, slightly below this 2250 area, or look for some sort of a sell-off down below that 2250 area, that will be a divergent low. And so your daily RSI will look something like, it'll probably look something like that. So you'll have that bullish divergence where you're making a new low in price and momentum is now diverging higher. So that's a high probability. I will be buying down there for sure because it will be a divergent low. It will be, into major support. There's major support down here in this area, and we'll have bullish divergence. It's basically the perfect area to buy. It's as good as it can get. Nothing's guaranteed, but it's a very high probability area to be going long this stock. Now, and look, you also have the bullish crossover. There's your bullish PPO crossover. So a little bit lower price, putting in the divergent low will keep this thing in bullish, keep the PPO, above the blue above the orange there and in a bullish posture. And RSI will have bullish divergence on the daily. It's about as perfect as you can get, and nothing's a guarantee. All right, and let's look at Citibank here. This is the one that looks pretty weak. Look, on the daily chart, negative divergence just starting to show up. All right, so the trade hasn't really triggered completely yet, but we did kind of get a sell signal. We'll start to look at this. So negative divergence on the daily. Your PPO is, let me zoom in. Look, it's just about ready to cross. See the blue? It's just heading straight in. It's about to cross. We haven't got the crossover yet. So look for the crossover in the PPO on the daily chart. And then your trend line here looks to be right about here. You got this daily trend line that we've been walking up, and we're starting to break. Let's go to the hourly here. You can see there it is. So your trend line on the hourly right there, kind of walking up it. False breakdown right here. They broke down, it gapped down, and then they bought it up. So it was a false breakdown. Ran it up into major resistance, and then it broke. And, not super impulsive, but we'll see how this plays out if there's continuation. They could obviously gap it back up above support as well. Looking at the weekly, I think I've got, on the weekly here, this is going back to 2011 on your weekly chart, and you can see there's your low. This is really the bull market low for the Citi stock. Sorry, not the bull market low, but it is, because here's 2009 where these things just plunged. This was the big overshoot, and when you started to kind of put together a pattern of support, it really started right here at 2011. So we held support through here, held it here, didn't quite get there, held it again right here. And then recently on the COVID drop, we broke with a big gap down and just a big impulsive sell down. And now we're back testing from below. So back test, recovered. It's not the cleanest line because it's a weekly trend line. They're never going to be as clean, but you can see held, recovered it, but then the following week they broke it back down, and then we've recently come right up into it again. So we're at major resistance. We've got bearish divergence on the daily chart. We've got a broken hourly trend line, not impulsive, but it is broken. And so, those are things that you want to see. There's a lot of different signs, a lot of different indicators, and a case can be made for a bearish breakdown. So I'm looking for a break. We got a gap down here at this 53.65. I think we probably, that's likely the first reaction. This line I don't think we're going to get too much of a reaction there anymore. So I think we fill this gap, 53.60 area, and then probably get a reaction. And then we have another gap way down here. Yeah, it looks to be right about there at 43.58. So from high to low, that's a move of about 26%. That's the trade idea. I think that would be a pretty logical trade right there. So looking for that one. I started a short position on this on Friday, although it's just a starter position. I'll add to it if it continues, if it starts to work. And that's all I got, guys. It was a long video, but I know yesterday I tried to put out a video and it had no audio, so sorry about that. And I will get this one out. Leave me a thumbs up, and if you want to learn how to use technical analysis to your advantage, take my trading course. It will train you. It will teach you how to use the charts to put the trades in your favor. Nothing's guaranteed, but it's all about, finding out when the probability is in your favor and then making plays on it. That link is in the description below. So thank you. Catch you guys on the next one.